Welcome back. With housing affordability top of mind in Canada, what's the story for the 30% or so of Canadians who are renters? Here's a look by the numbers. The market for rentals is tight. At 1.9%, the vacancy rate is the lowest in 21 years. 3% is considered a balanced market. That tightness helped send rents up by the most on record, 5.6% increases last year for a two-bedroom purpose-built rental. There's an estimated 25,000 to 30,000 deficit in rental units in Canada, and that will grow to 120,000 missing units by 2026 unless action is taken. Last year, rental stock grew by the fastest amount since 2014, but the growth rate was just 2.4%. To get to a balanced market, that would need to be 20% higher. It's worth noting that those who do have a rental unit aren't always in a good place. Many provinces have 7% or more of their populations living in overcrowded housing. With 500,000 newcomers targeted a year and many more of them likely to be renters, at least to start, this is a market that's likely only to get worse unless action's taken. But don't call this a housing crisis when it's simply a market doing exactly what it's designed to do. Ricardo Tranjan is author of the new book, The Tenant Class. Ricardo, thanks for being with us.
Thank you for having me.
So this market, as you say in your book, is functioning as it should, and yet the outcome is not what is desired. What's the disconnect? What needs to happen to make it work better?
Well, when we talk about a housing crisis, we tend to think about something that is unexpected or surprising and something that impacts a large number of people, perhaps everyone. Whereas the housing market, the way it's set up right now, it is really difficult for tenants to secure housing. But on the other hand, those who are renting houses and those who are building housing, they're having really high profit margins. So it's not necessarily a crisis in the way that we think about COVID. It is really a market that it's functioning for some, but not having the desirable impacts in terms of housing security that we'd expected it to have.
Is it as simple as we keep hearing more supply is needed, that set of housing across the board, but certainly for purpose-built rentals? Is one policy solution just to build a lot more of this?
Supply is necessary, but not sufficient. We do need to build more, but building by itself won't solve the problem from a affordability perspective. What we build, where we build, whether those new units are purpose rent, whether they are protected by rent controls, whether we have vacancy controls, where they're located, if they're accessible or not to services and to transit, all of those things have to be taken into account. Mm-hmm. So it is important to build. We should continue to build, but there should be a very clear and targeted policies to build the kind of housing we need at the price that folks can pay for.
And of course, we have seen things like rent stabilizers, which have been in place for a long time in most parts of this country, removed in a lot of places, and therefore rents popping even higher than the rate of inflation. Does it surprise you that that kind of policy action is taken at a time when the same politicians talk about the need for affordability?
Absolutely. It's the opposite direction that we need to be going. You don't want to say that all landlords will engage in predatory practices, but when you weaken rent controls, you are enabling predatory practices. And that leads to really concrete problems in terms of affordability for tenants, and it can lead to what we're seeing right now in Toronto with 2 rent strikes against PSP investments, mm-hmm. against Dream Impact, where above guideline rent increases, which is one of the weakening mechanisms for rent controls, have been pushing rents up by too much. And
this rent strike concept, relatively new to most people, Ricardo, do you think we'll see more of it, that we'll see renters kind of banding together? It feels very old-fashioned, right? It feels like, storming the barricades kind of stuff.
It is old-fashioned, but is effective. It has an impact in challenge the power dynamics and altering the power balance between tenants and landlords. When tenants are organized, they're more likely to get the outcomes that they desire. Also, rent strikes raise public awareness about the issues from the tenant's perspective. And also, when you look at it in historical terms and you do a little bit of empirical research, usually when the tenant movement picks up strength, that is usually followed by changes in policy too. So it's an effective tactic. The times are difficult, so I think yes, we're likely to see it more.
Ricardo, so good to have you for this. Really appreciate it.
Thanks for having me.
Ricardo Tranjan is a senior researcher at the Canadian Centre for Policy Alternatives. The banking regulator warned this week that lengthening mortgage terms could create risk in the housing system. OSFI is concerned that as rising rates have increased interest payments, some borrowers were no longer meeting minimum payments, and that rather than increase those payments, banks are simply extending the amortization period. How troublesome is it? Mike Moffat is the Senior Director of Policy and Innovation at the Smart Prosperity Institute. Thanks for being with us.
No, thank you for having me.
So we know that sometimes this is just an automatic thing that happens, right? If somebody has a fixed term payment on a variable rate mortgage, their amortization gets extended. OSFI is basically saying to the banks, stop doing this the way that you're doing it. We have this growing number of mortgages that are now more than 30 years. Mike, what's the risk to the system that OSFI is talking about if this continues?
Well, I think the risk is that you're going to have these homeowners who, have sort of increasing levels of debt that they're, paying a lot of interest and not so much principal. But in the bank's defense, they want to make sure that, homeowners are able to make those payments. The last thing we want in Canada is a wave of default. So it's kind of a damned if you do, damned if you don't kind of situation for the banks.
Yeah, and I mean, it's funny when you think about it. It's not funny, but banks don't really foreclose on homes, particularly in this country, right? They're not in the business of taking back your house and trying to sell it. They're happy if you can't stay in your house, that you sell it and get out of your mortgage that way. Are we in this quandary of that old joke of if you owe the bank $1 million, that's your problem, but if you owe them $10 million, it's the bank's problem? Do we have such a large mortgage market now that it really is the bank's problem if people can't afford them?
Certainly, that there is that sort of systemic risk out there that there are a lot of Canadians who have these variable rate mortgages that are getting longer and longer amortizations. So about 20% of the Big Six's banks' mortgage portfolios have these amortizations of 30 years or longer. So that is a real concern to the Canadian economy. Hopefully, interest rates will settle down. We'll stop seeing these increases, and this will be something that we'll look back on and not an increasing problem.
Mike, what happens to this whole picture if the value of those homes should precipitously decline? In other words, you're still in your house, you have your mortgage, but the amortization has now been extended, and then for some reason, because the central bank keeps raising interest rates, the market turns on you, and your home is worth half of what you priced it at the mortgage period. What happens then? Does the bank then actually have to foreclose on homes?
Well, they certainly might. Now, this plays out differently in Canada because in most of Canada, we don't have the sort of zero recourse mortgages that we saw in the United States during the financial crisis. So homeowners can't just simply sort of walk away and hand the keys to the bank. But there is that concern that if we do get into a bad recession, if there is high job loss, that the banks will have no choice but to take over some of these mortgages at a time when it might be quite hard for them to sell.
We got, it's of course a monthly number, but we did get construction starts data from the housing regulator this week, and it's down 23% in May. Are we, do you think, doing what we need to be doing to increase the supply of housing, which goes to a different part of this problem, but it's the affordability and access part of the problem?
Yeah, so we're not nearly doing enough. That all of our sort of economic indicators or economic trends are pushing us in the wrong direction, like interest rates. There's far more that we could be doing to stimulate housing growth, and that's everything from immigration reform to get more skilled tradespeople here, to tax reform to basically give the private sector incentives to build purpose-built rentals and other types of properties. But yeah, there's far more we need to be doing because these numbers are moving in the wrong direction.
Mike, so good to have you. Always appreciate your time.
Oh, thank you for having me.
Mike Moffat is Senior Director of Policy and Innovation at the Smart Prosperity Institute. Coming up, many immigrants dream of a life in Canada, but for some, it turns into a nightmare. What are we getting wrong? That's still ahead, but first, it is a wrap for Nordstrom in Canada, with the last of its stores closing after liquidation sales for the past few weeks. After opening its first store back in 2014 in Calgary, Nordstrom and its discount brand, Nordstrom Rack, grew to 13 stores. It filed for protection from its creditors here prior to closing, becoming just the latest big U.S. retail name to fail to crack the Canadian market. Though to be fair, some pretty big Canadian names are on the ropes as well. Shoppers are a finicky bunch, and the day of the department store may well and truly be coming to a close. We're back after this.